Well, hello, everybody. Welcome to Market Monday. Blair Nightingale. I'm coming at you guys today from out here in Minneapolis. Was in Minneapolis this weekend teaching a group of brand new students the kinds of things that I've been showing you guys here every single week on Market Monday. Of course, we go a lot deeper inside of our classes, but I want to come at you guys today from Minneapolis back into the Dallas area later, but want to make sure I get some time with you guys as always on Mondays, looking at what's going on in the market. And every now and then here on Market Monday, we get the opportunity to do it in a more live market environment. Of course, the markets are open right now. And if I zoom in on the S&P 500 here, you can see, I'm going to shrink this down just a tiny bit. You can see that we were in that trend. We broke out of it, fell up into the 10-day, down, up into the 10-day, down, up to the 10-day, down, and now trying to break out of this a little bit. But, even earlier today, having that wick there, I drew this line on this regardless, because that's really where it's been falling from. And we're seeing a little bit of a pullback here late in the day. So one of the things I want to remind everybody out there is that price, right? The analysis of price is what we call technical analysis. The thing about technical analysis is we can just become very, very, very technical. And though there are things we can do to get better and better at our technical analysis, there are some things I want you to remember. Number one, technical analysis, it doesn't tell us the future, guys. Okay. And even though most traders, most of the time would say, well, no, of course, it can't tell us the future. There is something in the trader's mind that can slip into prediction, okay, without even fully realizing that that is happening, right? Technical analysis tells me this, so this must happen. That's where we get into trouble. Technical analysis never tells us what must happen. Technical analysis tells us what is more or less likely to happen based on a pattern. Based on a pattern, I say to the students, square, square, circle, square, square, circle, square, square, right? We could then say, well, the pattern suggests to me circle, right? That it might continue, but it doesn't guarantee that it might continue, okay? And in this case, I simply draw lines when the pattern shows me repetition, okay? And of course, we learn how to identify these patterns and draw lines on them, and then learn how to exploit them in higher probability ways. That is the skill set of a trader. Very important, skill set and the mindset, both of what we focus on here at Tradeway. But you can see it's starting to pull back into here. So it'll be interesting to see if it can actually close below that line. It's still going to have to make it above the 10 and 20-day moving averages here, which it tried here, failed. You can see it poked above it there and reversed pretty strongly by the end of the day. Of course, today being Monday, we had CPI on Thursday came out more favorable. That sent the market up, but it wasn't enough to hold off with PPI coming out on Friday morning, which wasn't as strong, right? It wasn't as strong. So we saw a bit of a whipsaw, and we have been seeing that here in the market the last couple of weeks. A little bit slower on the news side this week, okay? Still noticing a good amount of earnings reports out there, but the bulk of the earnings season is behind us. So we're not worrying about the news on earnings quite so much, but it is still a news item out there right now. Okay, we don't have a Fed announcement that we know of this week. Certainly nothing on interest rates in terms of an actual decision. A little bit of earnings out there, and then there'll be some consumer spending reports this week as well that'll come out tomorrow. That'll be something that the market grabs onto. But overall, we're really looking to see if we can move back above that 10 and 20-day moving average and continue some of this bull run that we've been seeing in the markets. A huge catalyst for that, you'll notice, getting pretty close to the 50-day moving average. But I've said on here many, many times, it's worth going out and making sure we have an eye on the NASDAQ as well. I'm showing you the NDX ticker here. This is the NASDAQ 100, okay? There are about 3,600 stocks on the NASDAQ, but here we're focusing specifically on the NASDAQ 100 index. And you can see it's long broken out of that line, doing a very similar thing. If I come in here and I just take these highs and I draw a line just like that, and I would even actually go in here and put it right around there. Save that, zoom in a little bit further for us to see. Okay, and notice it's coming into that high and dropping, into the high and dropping, but it's at the 50-day. So even though the S&P 500 is not right down to the 50-day, you notice it's catching a bit of a bounce today. Well, the S&P is close to the 50, not at it, but the NDX here, the NASDAQ, is right at the 50. So seeing enough of that buying pressure here on the tech side, you got to watch and say, well, when I see the S&P sort of turn directions in an area that almost looks like it's kind of just floating and turned around, I'll just jump over to the NASDAQ and say, well, what's going on over there? I see the NASDAQ at the 50-day moving average and climbing for the day, right, up less than 1%. Not a huge day here, but moving up nonetheless. That's something that I say, all right, well, that's definitely going to lift the other indexes a little bit. It creates some of that buying momentum. It's not going to be the only thing that just because the NASDAQ's moving up doesn't mean the S&P has to. But you can see how there's some correlation in the momentum there. And when this guy's at the 50-day, that's part of the reason why for sure. However, you can see this guy still very much, I can adjust this down right about there, still very much inside that squeeze, okay? So to really feel good about where this is going, I want to see this break up and out of that slight downtrending movement that it's been in here, okay? And then pull back and give me another run up into these recent highs. That's ultimately what we would look for. Still some stocks out there right now that are actually looking pretty good, holding the pattern. We just keep talking about GE. In this market, this is just one company, and it's not in the technology sector, that just continues to make a very, very consistent pattern, okay? Inconsistent here in that, we had earnings, which we would not trade over earnings, but then it pulls back into the support level and bounces. The market, as I mentioned, bit of a pullback here the last little while, pulled this pattern down into the support level after making only a partial bounce here, right? It didn't make it all the way up to come back into support and then get another strong 3-day move today out of that pattern. So you can see this is the foundation, going back to what I said in the very beginning, where we're going, all right, the whole skill set of trading is not simply finding patterns, but the foundation of a technical trader looking to identify not price movement, but price edge, okay, probability, is something we build off of technical patterns. Now, we may not even choose to trade in a way that is directional, meaning that we require the stock to move one of two directions, up or down, in order to have a profitable position. But we do look for the pattern to build whatever strategy it is that we're going to do around that specific stock, okay? So that is the start of everything we do. It's the foundation. It's not just the basics. It's the foundation. So the market still continuing to have in its narrative, in its eyesight, what's going on with inflation. It's coming down in some ways, but in some ways it's more stubborn. It's still too high above that 2% target that the Federal Reserve has, still quite a bit higher than that, almost double that. But it has come down from where it was, okay? Significant inflation is still coming down quite a bit, over 8-9% at one point. So it's come down quite a bit. But I don't know if the data necessarily bears out in a way that shows that it's really taken the burden off of a lot of Americans in a way that they may want that to seem. However, it is something that the market is more happy about, because it sounds like they may slow down these interest rate hikes. I still think there's some time to see how those hikes are really going to work their way through the system. But for now, I'm going to continue to watch and see what the price pattern does, and see if we can get a strong close today on the S&P outside of that line and push up above the 10 and 20-day moving average to get us into a position where we might look at some more bullish trades. If it fails and it can't hold here, obviously we're taking a trip back down towards the 50-day, and I'd want to see that really break out Shorting positions really close to the 50-day moving average is something I would be very, very cautious about doing. There certainly is more of a gambling aspect to that. When you feel like I'm shorting at a potential support level, I'd want to know that that stock was very, very weak, didn't have much correlation with the S&P index, and then that could make a little bit more room for that to be a successful position to be in. Okay, that said, appreciate you guys being on here. Market Monday. Just a quick one tonight. I will be back in studio next week with you guys. Of course, as always, if you have any questions, comments, anything you'd like me to do a program on, I would be happy to hear suggestions and recommendations from folks. The things that are going on in your world, in your trading, and you would like to learn, I would like to cover that as well. So you can always send that in to support@tradeway.com. And we'd be happy to take care of you. Thank you so much for being on here tonight. And we